Right, hello and welcome back to another video. So this is my January 2024 portfolio update. So we'll see how we got off in the start of 2024. It's been a relatively okay month. There's some really good periods in it, and then it kind of flagged a bit towards the end. But overall, we are up for the month. But before I get into all the stats and everything, just a quick note to say that I've got a new microphone. So if there is anyone watching this that has watched any of my previous videos, just let me know if the sound sounds better or not, because I'd be interested to know. I was just using the webcam mic before this, but I've invested in still just a USB mic, but hopefully the sound quality is a lot better than it was. Anyway, let's move in to the performance for the month of January. So as usual, I won't say it every month, but I will still say it at the moment because that's still relatively new to the series. I use Stockopedia to for these videos to track my portfolio. I use AJ Bell as my actual investment platform, but I use Stockopedia for a lot of my research and kind of discussions and that type of thing. It's a very good platform that I find very easy and intuitive to use. So I recreate my portfolio on there just to give me a bit of privacy, so I'm not revealing sensitive information or anything accidentally, as I may do if I'm showing you my actual AJ Bell account. But it's all one-to-one. Any trade I put into AJ Bell, I put into Stockopedia with the exact amounts, including trading fees and all that kind of thing. So it's one-to-one. It's the same information. So this is a screenshot of the monthly performance. So this started on the 1st of January, runs through to the 31st of January, as you can see down here. Can you see the mouse? Yes, you can. That's good. So 0.85% for the month, which is okay. It's not a loss. So it's good, but it was, as you can see, peaked above 2% here, and then we gave quite a bit back in the last couple of days of January. But I mean, you're going to have gyrations and swings through the course of a month, let alone like a year or more. So that's just completely understandable. It's just a shame it happened at the end of the month. But we've been doing well recently in terms of beating the benchmark that I use, and that is the FTSE All Share Index, which is a composite of 600 or so shares in the UK index, covering a range of market caps, which reflects my investing style quite well, because I invest from micro caps, kind of less than £50 million market cap, all the way to mega caps, like I have shares in Meta and Google and things like $1 trillion market caps. So I find that's a reasonably good benchmark to use, and we smashed it. So the FTSE All Share returned minus 1.39%. So we're off to a fairly decent start against our benchmark. And then I always show the year to date, but that's going to be the same. So we'll skip over that because obviously it's only been 1 month so far. This is my all-time returns. So this is from when I started the public portfolio, which is way back in January 2022. It went flat for quite a while because I didn't have too much invested in it. I was kind of experimenting. And then we had a great run. A bit choppy last year. Last year was a bit of a struggle. But total portfolio returns for basically 2 years, just over 2 years, are 13.35%, versus the FTSE All Share of minus 0.83%. So we're trouncing the FTSE All Share. And you can never predict anything in investing, I know, and you should never kind of be hopeful. You should just work with what comes along. But I am hoping for a good year this year. I think even if the markets don't go in our favour, I've learned so much over the past couple of years. I think I've really got my investing strategy and style nailed down now. I feel so much more confidence in my entries and my exits into stocks that are on my watch list. So even if the markets don't go incredibly well this year, I think I should perform reasonably well. Famous last words. We'll see what the video I record in January 2025 says. But yeah, I think we're set up in a good position. And this just gives a quick overview of, so total valuation of portfolio, including cash, is just shy of 83,000. We still have quite a lot of cash to work with, 28,000 cash. and so we're 34% cash, 66% invested. And I should say at this stage that I have money to add to this. So the public portfolio is a portfolio of stocks with my new investing style that I've developed over the past couple of years. Before that, when I first started investing, I bought all kinds of stocks for no real rhyme or reason. I didn't really have a proper strategy. Some of those stocks I still hold. Ones that I wouldn't buy today, but either they're performing okay by fluke, or they're ones that I've lost, that I'm down on paper, but I do actually think they've got a reasonably good chance of coming back, so I'm holding on to them for a certain time period. But when I sell those, whether at a loss or a profit, that cash will get converted to the public portfolio. So every now and again, the cash I have at disposable will increase. So that might jump up to like 90,000 without performance. But that's why I always show performance, because Stockopedia calculates it all. And if you add 50,000 to the account, it won't increase the performance. It will only show performance on your profits or losses. So that's just to let you know this figure might jump every now and again quite drastically, but I'll try and remember when it does and let you know. Yeah, so we have quite a lot of cash to work with. This is, before I get into the buys and sales I made in the month of January, this is my portfolio. So I've ordered it in percentage gain. So again, for those that have been, if there's anyone out there that has been watching the whole series since I started in kind of October, if there is, please let me know in the comments. That'd be great to see if there's anyone that's actually kind of coming back month after month. It's very early days, and it's trying to get the channel to get a bit of traction. I think posting a video once a month probably isn't enough to do that, so I might start posting some videos in between. But this has improved quite a lot. There was a few more positions in the red before. A lot of them have turned to green. A lot of them are still around that kind of break-even mark. But our biggest loss at the moment, paper loss, is 15%, which I think is really good. My new strategies that I'm working to now, I cut my losses a lot sooner. So if Impact Asset Management drops much more than that, it will be cut. And we're starting to get some larger gainers. Meta's plus 123%. And I'm recording this after they just put out their stunning earnings and they jumped 20% in a day. So this is now up to kind of 160%. So we're doing well on that. And yeah, a lot of positions are starting to kind of look like they might want to move. A lot of these are still kind of just breaking out of trading channels. So there's a chance a lot of these will run. But this just gives you a quick overview. It's pretty much 50-50 US and UK, between US and UK. And I try and have a healthy balance across different industries like technology, healthcare, industrials. But at the moment, it is very much tech weighted. And I'm very conscious of that. So I've got quite tight stops on all of the big US tech stocks that I own. Because if they start to turn, it will have quite a big impact on my portfolio. But hopefully, if that does happen, it won't be kind of a sudden big drop and I can get out pretty quickly. And the reason for that is that I'm heavily weighted in tech is just the way that my checklist system works. At the moment, there's a lot of tech stocks that are making the cut and a lot of industrials and defensive and that type of thing are not. And I think that's a good thing about the checklist is it will automatically, without me having to think about it, adjust my style through different market cycles so that I'm investing in what is performing well at that time. So let's get into the buys and sales that I made in January then. So one of the first new purchases, I can't see, was Nvidia. And this was the definition of my new entry style. I think we raise this mic a little bit. Yeah, this was the definition of my new entry style of buying on a breakout through previous resistance on volume. And I missed it the very first day, but I got it the second day. And this is, we're recording this on the 6th of Feb. So we've overrun slightly. But as you can see, this has been a very successful trade. And we're up currently 31% in not very many days. When I bought on the 9th of Jan, so less than a month. So it's one of those I wish I'd bought more now, but that's the situation we're in. It was an opening position. I just bought 4 shares because they're quite large share prices, so $500 per share. So I just bought 4 as an opening position, and then the intention was to add to that when there was an opportune moment. So as an example, if let's just say, going back, I bought here. Let's put a line in. Let's say this was the previous resistance, and I didn't, but let's say hypothetically I had bought here. I would then add to the position when there was a sideways movement and then a breakout. So I would have bought here and then added here. So I would have enlarged my position. So I'm just waiting for that to happen again, effectively. I'm waiting for a bit of consolidation, a resistance to be put in. And then when it breaks through that, I will add to my position. And that's the same as what I'll do with all of my stocks going forwards now. So we've added on that. It's going very, very well. I'm thinking about raising my stop. So this red line is my stop. Maybe under this very slight level of support that we've got here. But I do want to give it a chance to move. If it has a bit of a pullback, I don't want to get out too quickly. So I'm just waiting on that at the moment. Doesn't seem to be running out of strength yet. The other stock that I purchased is new to the public portfolio, but it is a stock that I have held for a while, but it previously didn't pass my checklist. It was one of these that I first bought. Did I buy? Yeah, I first bought back here, but didn't pass my checklist. It's one I've held. I'd bought back here, sold. It's one I've kind of had multiple trades with, so it's always been there or thereabouts. I bought here and here, but it didn't pass my checklist, so it wasn't part of the portfolio strategy. But recently their financials have improved. It's given it some more points, and it now passes the checklist. So it's on the watch list for the public portfolio. But because it wasn't before, these buys don't count. They're just for my personal stance. So effectively for the public portfolio, this is an opening position. And again, it was a similar setup. There was this level of support here. I put in this resistance line. It broke through there. And I bought the day after once it closed to confirm that it was holding above that resistance. Since then, it's kind of tested this line, and it's recently, the past few days, started breaking up. So far looking like another successful trade. And I put my stop loss just below the previous level of kind of consolidation. So we will wait to see what that does. And every time there's a new level, I'll start putting it on the 150 day if it starts to move up. So that's Keystone Law. That's a UK, as you might guess, law firm, but they franchise out their practice so that independent lawyers can set up practices with them and get all of the support they need. I've forgotten what they're called now. Like the researchers, assistants, all that kind of thing, all the IT support that they need. And they give Keystone Law like a fee or a percentage of their profits for that support, effectively. And then another one, which was an add-on, a previous holding in the portfolio, was ResMed. So this was a very poorly timed purchase back here. This was before I had gone through. It's a relatively recent improvement that I've made in my buys and entries. When I was reading kind of some books, it was in kind of the end of last year, October, November, December time, around here. Before then, I didn't really have a good entry strategy, so I just buy when I thought it was a good idea. So here there was a big drop. It kind of leveled off for a little bit, and I thought, oh, that's a good time to get in. So I bought, and then it obviously continued to fall. My new entry strategy, for those that haven't heard, is I wait for it has to be above the 150-day moving average, and I wait for it to break through a level of support once it's above the 150-day. So this was prior resistance here. It broke above the 150-day here, but there was still this level of resistance. So I waited for it to break through there, and then I added to my existing position. But it would have been exactly the same thing if I was opening a new position. It's just this is where it happened to be. So that looks like it's going well. They put earnings out in recently. In fact, while we're here, Okay, so I'm back. I've just pulled this up. So one of the things I do, and I post all these to Twitter if you want to follow me on there. So every time a company releases earnings, both either American, the quarterly reports, or in the UK, they're kind of fully or interim reports. If it's a company that is on my watch list or I'm keeping an eye on, I will do an earnings snapshot for it. This is mainly for me, but I just post them onto Twitter and kind of Stockopedia forums and things, just if other people are interested. But this helps me keep an eye on how the company is doing, and I can look back through their previous earnings and very quickly with this kind of traffic light system, see if they're improving or worsening. But this was ResMed's most recent earnings, and one of the things that encouraged me one of the reasons that it broke up through the support, because it's fairly good earnings, but that also gives me the confidence to purchase on the back of good earnings. So ResMed are a company that do masks and breathing equipment for people that have sleep apnea and that type of thing. And they're performing quite well. They did miss on their bottom line, but they're growing well on the top line, and all of their kind of forward guidance and things and things they were discussing on the earnings call was quite encouraging, and there wasn't anything kind of too disastrous. It was all kind of as expected. So relatively good earnings on there. So that was another reason to add to this position. So that was all of the buys for the month of January. In terms of sales, we had two, and I'm going to have to go off because they're not in the public portfolio anymore. So if I go to watch list, they're both UK stocks. One of them's actually been demoted. It's not on the watch list anymore because it was IG Group. So they're the company that does the trading platforms. So yeah, they do kind of stock trading and Forex trading and all that kind of stuff. And they also do spread betting accounts. I have a spread betting account with them, but I very rarely use it. But I was building a position in this one, as you can see. And it had recently broken through a layer here. So I bought on that strength and it started running up. But then they brought out earnings. Again, let me just pull up the snapshot I did for the earnings. Yes, so they released earnings and it was effectively quite a severe profit warning. Their forward guidance was here. The market conditions we experienced during H1, which was poor, have continued into the beginning of our Q3. Despite this, the business continues to perform well, reflecting our increasingly diversified revenue mix, but overall quite negative. So they missed on all of their guidance, on all of the expectations, and they're saying that those conditions are expected to continue into the next quarter. They have got some good things going for them, but this effectively drastically reduced their profit guidance for this year. As you can see, in terms of kind of their EPS, they're down 27% year over year, and it was almost a 35% miss on the expectations for their earnings. So you can see here that the day of earnings, they took a relatively big fall in their share price. I sold at the open, even though it doesn't look like it here. Well, I tried to sell at the open. I ended up having to sell in two sales because I couldn't. It's the first time this has actually happened to me because I'd been building a position. It wasn't huge. It's only about £5,000 worth, but I couldn't sell the position in one go. And it took me a few attempts to realize that that's what was happening. So I had to sell in two split sales. I ended up not getting the price I could have done at the open. It was about 5-10 minutes later and I got a slightly worse price. But I got out there just because if there's a profit warning, I sell. That's one of my rules. And it has continued to fall since. And I think it will do, to be honest, for a few months to come until they can kind of get back to that strong growth that they were achieving before. So we sold out of that on a profit warning. We actually came out of that, not a huge win by any means. We basically break even, but we did make, we did make 2% on the trade after all fees, including all fees and everything. So tiny, it's basically break even, but it's not a loss, so that's good. And the other one we sold out of, which is still on my watch list. Yeah, so IG Group, with the adjustments to its forward guidance, it lost some points on the checklist and actually bumped it off the watch list. Now it's just to keep an eye on stock. So I'm not allowed to buy it at the moment. And then the other one was Sylvania Platinum. So this is one that it was in this defined trading channel below my valuation line. And I bought once it had bounced off the bottom of this trading channel, which is something I'm allowed to do. That's in my new trading strategy as a acceptable entry when it's in this defined trading channel. And my stop was just below here. So it was a very small risk, but with the potential reward of either just going to the top of this channel, which I had the intention of selling at the top for a 20% gain, or if it had momentum and broke through, then adding to the position and continuing up. I didn't actually wait for it to get to the stop. It came up here. It was struggling to stay above the 150-day moving average. They put out a couple of news updates during this time that weren't the most positive. Mining companies in general seem to be struggling at the moment, platinum mining companies especially, because the PGM metal prices aren't performing very strongly. And I could just sense here that it was weakening, and I thought that it was probably going to fall through here. So I thought at the time, why not sell now for a very small gain? Again, this was basically break even. It was only a 1% gain once fees and everything have been taken into account. But I'm quite pleased with myself here because it was a very well timed sale. Yes, I could have sold up here, but you can't always sell at the perfect time. I sold here, and then ever since then it has been falling off a cliff effectively. It broke through the support line at the bottom of the channel and has been falling like a knife ever since. So this is one that is still on my watch list. I think it's still a relatively good company. It's just one that's really struggling at the moment with commodity prices, and they have a couple of structural problems within the company themselves, but nothing too major as far as I can tell. But you can see it's been on a steady decline now for quite a while. But I will just continue to watch. My expectation is that it will fall for a while, start forming a new base, and then I probably won't try and buy at the bottom of the channel again with this one, just because it's showing continuing weakness. But what I will do is I'll set up like this one with a line at the top of the channel, and let's get a pen or some paint. Let's say it comes down here and then forms a new channel here, and that is the top of the channel. I will buy if it then breaks through the top of that channel, and that is above the 150-day moving average. So that'll be my entry. So it's a good system, I think, that I've got set up for myself. It works well for me because I do the research. A stock gets the points that it needs to go onto my checklist. And if you don't know what I'm talking about with the checklist, I've done multiple videos on it. So just go back through the videos on my YouTube channel, or if I remember, I'll link one in the description below. But the checklist basically looks at the fundamentals of the stock, its financial performance and its business performance. And then, once it gets onto the watch list, I then just follow the chart for an appropriate entry point. This, just to finish, so that's my January update. I don't think there's anything else to go through at this stage. Make sure this is up by my mouth. But this is a quick run through of my watch list. These are UK stocks that are on my watch list, so there's a fair few there. I'm not going to go through them all because it will take an age. I might do a dedicated video on running through all of the stocks in my watch list at some point. But this is all the UK ones. So I split them into the kind of sectors that they're in: cyclical, defensive, industrial, just so it's easy to get a quick glance. And then my US watch list. So I split them into US and UK just because of the different times of the market. It's just easier to see what's going on, rather than not knowing whether a stock in a particular list is actually live at that time. And so this is my US watch list. So all of these stocks on both the UK and US watch lists, I can buy. They just have to pass the technical parameters. So let's go on one that I haven't. Which one is low? So Qualcomm. This one recently got added to the watch list. So you can see it's on my watch list. It wasn't on my watch list down here. The financials weren't good enough. But in the last couple of earnings results, the financials for the company have improved, and it's given it enough points to go onto my watch list. So now I can buy this stock, but it has to pass the financial setup. So it's above the 150-day moving average. It had a big spike. It's had a retracement. So I can buy it on momentum when it breaks through this previous high here, which is now a level of resistance. If it breaks through there, I can buy at this stage and let it run up, and my stop will be, depending on where the moving average is, it'll be somewhere down here. So I'm not risking too much. And that's the same for all the stocks. That's another stock I don't own. Arista Networks. So this one's actually gone on a tear. So this was added to the watch list some time ago. I think it must have been added after this though, otherwise I would have bought. So somewhere in this period. And basically I'm not going to buy it as it's just running up. So I'm just waiting for it to make some form of retracement, to come kind of down. It might not happen, but that's fine. Go sideways for a bit. And then once it pops back up, oh, I didn't mean to do that. Once it pops back up and goes above this level here, I could then make an entry here. So it's just sitting, waiting, keeping an eye on the charts, keeping up to date on earnings, and waiting for the correct opportunities. And as I say, I'm constantly researching stocks. When it's earnings season, I find it difficult to research too many just because of the amount of time that going through all the earnings that are released takes. That takes up most of my day at the moment. But then when it's the quieter, especially the US off earnings season, it gives me time to research a few stocks. And so in between earnings seasons, I normally add kind of 2 or 3 stocks to the watch list. And obviously during earnings season, stocks get bumped off the watch list like IG did. So it's kind of a constantly churning cycle. Anyway, that is it. I'm starting to ramble now. That is it for the month of January. We are well into February now, which is going reasonably well. So I'll aim to get my February update video out earlier than this, hopefully on like the first or 2nd of March. And we'll see how that month goes and what has changed in the portfolio and the watch list at that stage. If you're still here, thank you for watching this long. If you've enjoyed the video, if you like the series, please hit that like button. It does help the YouTube algorithms, and subscribe if you want to keep up with the journey. Thank you very much. I hope you have a great day. Now on to the next one.